In this ThinkScript tutorial, we're going to be building our very own opening range breakout indicator. Now we're going to make a few different twists on the typical opening range breakout indicator that I think most of you have seen to try and make it a little bit smarter. Plus, you get to see how it's built along the way. Now before we go into how to build this and write the ThinkScript code, it's important to understand what this opening range breakout setup is in the first place. On the right hand side here, you can see an example of this. I have 6:30 to 7 drawn out. That's essentially one of the basics of what the opening range breakout entails. It's the first 30 minutes typically after the market opens, and in that period we're looking to measure what is the lowest low and the highest high. So using each of those levels, for example, we would say this top portion is the opening range breakout high, and this bottom portion would be the opening range breakout low. Now, using that information, that gives us horizontal lines that we're looking for price to break outside of, one direction or the other. Now that then brings in the second question of what a breakout entails. And a few people have a few different rules on this, and it comes down to, I think, two big buckets. One is, do you classify wick touches, something like this, to consider a breakout? If that's the case, then this would be considered your breakout of the opening range and be a valid setup. If instead you're looking for a close, then this candle would not meet your rules. You'd be looking for the first candle that definitively closes above your opening range level. Most indicators, I've noticed, don't really account for this. We're definitely going to make sure that we give the user an option to select this so that you can customize it for your own trading style. Because if, of course, you view something like the wick touch to be a breakout, then having something that's limited to only looking at candle closes doesn't give you an accurate representation of your strategy. Now, in terms of what we're going to be building, this is what we're looking for in terms of our basic requirements. Step 1. I'd like to be able to customize the opening range time based on whatever time period I'm looking at. We said 30-minute was the default, but from the code's perspective, for those of you that are inquisitive and just curious to see what happens for other time chunks, you should be able to change it to really any time chunks, 9:30 to 9:45, 9:30 to 10 Eastern, maybe even something like 11 to 12 Eastern. Any two random times, you should be able to compare. So that's one of the requirements I have for the code. The second portion, you should be able to plot bullish and bearish opening range breakout entries, and only after do you get those entries should any of these other lines come into play. Things like the projection levels. I'd like to see the pullback levels all the time, but for the projection levels, show me those only if we've broken out in whichever direction we break out. For example, here we have a bearish breakout, only then show me that half range and that full range projection, which is essentially taking this as the half range, projecting that to the downside, and this entire range is a full range, which is projecting to the downside right here. Another thing that you might want to add later on, we won't do it in this code, but it's a very easy thing to do, and we've done it in past tutorials, is adding an alert anytime you have a pullback to the half range level after you have an opening range pullback. That's an easy one that you might challenge yourself to add at the end of this tutorial. This tutorial in itself will probably take us around 40-45 minutes, so it's quite long, but I hope you enjoy it. Now, for those of you that would like to just skip to downloading the final version of this code and playing with it right away, you can download the final version using the link in the description box below. And that includes the opening range breakout indicator with the dynamic range we talked about, all of the projections that I just showed you, along with the pullback projections. So this is the final version of the code. You can A, use it to just import into your platform, but B, you can also use it to follow along with this tutorial just in case you don't want to do the writing. Now for all Volatility Box members, I've taken this one step further and turned this entire indicator into a full-fledged backtester. And this allows you to measure the P&L of the opening range breakout strategy on essentially any market. And I think it's particularly useful in this volatility period because it really allows you to find where the opening range breakout is working right now. There are a few pockets where you'll find it's working, but a majority of the places, the strategy for the most part tends to be about a 50% win rate you'll find with the backtester. Now, of course, you can measure this. You can use whatever time frame you want. You can also test between the wick touches and the close aboves and belows. So I think you'll find it's a fun tool that will allow you to do a lot of research and, of course, refine your opening range breakout strategy. Now, with that, I also have labels. I'll show you an example of this before we get to the coding section. But with the labels, you can see both winners versus losers, so you don't have to manually count it, along with what the average range has tended to be for the opening range, which I think is just another piece of useful information, at least for those of you that are data minded. Again, it's included for free with all futures and stock Volatility Box memberships. Speaking of Volatility Box memberships, for those of you that either are interested or maybe on the fence, a quick blurb around what's included. With our futures Volatility Box models, this is meant for those of you that focus on trading either futures, micro futures, or you focus only on trading, say, the index markets. This is, say, the S&P, the Dow, or the NASDAQ. Then you'll find the futures Volatility Box to be a bit more useful than the stock Volatility Box. With the futures box, you have 5 hourly volatility models, which are especially useful when you focus on just a handful of markets. So we have just 10 markets that we support. These are the major index markets. Then we have markets like gold and silver, and then crude, copper, natural gas, and then the 30-year. We also support the micro futures equivalents, and you can learn more about it on our link to our website right down here. Now, the one thing I'd like to call out with this is with the Futures Volatility Box membership, all of the pro indicators and tutorials and all of the premium content is included. The same goes for the stock membership as well. So if you're on the fence in terms of you're looking to learn more about thinkScript, you're curious about the volatility models as well, you'd like to give it a go, I think it's pretty good value. For the stock Volatility Box membership, we support 10,000 plus stocks. Again, updated weekly. Both of these are updated every single Sunday, and we update them at 2:45 or prior to 2:45, prior to that Sunday futures open. With the stock models, we also have our new hourly volatility models, which I think a lot of folks are finding really useful. So that's an additional benefit you have there in terms of checking out new tools that you might be able to add to your trading. And then, of course, the same tutorials are included as well. All right, with all of that out of the way, let's now get into planning for building this code. Now, before writing any code, I usually find it useful to make a quick little game plan of how I think the code should flow. So here's my plan for the opening range breakout indicator. Step 1 for me is define the opening range. I want to make this dynamic so that the user can control the time directly from the studies menu. They don't need to change the opening range time in the code. So if instead, say, of the default 9:30 to 10, you wanted to make it, say, 9:30 to 9:45, you could do so very easily, and the rest of the code would adjust, and all of the calculations, everything else just naturally works. So that's what I'm looking to do with the opening range. Then also track the high and low of it, make sure that value is carried forward, and be able to plot the opening range on our charts. So that's step 1, fairly straightforward. Step 2, we then need to define the time period in which we're looking to actually take this trade. So that's usually an hour after the opening range. So if you were looking at, say, the first 30 minutes, 9:30 to 10, then you might be willing to take that 10 to 11 o'clock hour to try and see, do we have any opening range breakouts, one way or the other, either a bullish breakout or a bearish breakout. Now, once we define this time period, we need to extrapolate these same opening range levels, but this time for the second time period. So that involves some complexity inside of the code. We need to account for that. After that is, I think, the fun part of this entire exercise, which is where we get to create switch variables for our entry type. If you remember, we had 2 different entry types here, wick touch and closes. Now, just because we say that and we might have a switch function doesn't mean that the code naturally knows how to do that. There's some things that you need to account for when you create a switch variable, and you need to plug that in so that the remainder of the code knows which value to use. So again, some complexity, some additional logic that you'll need to account for in this section. And then finally, we plot all of the different levels that we've calculated. So the opening range, high and low, the projection levels, both half range and full range. And we make this a little bit smarter where we see these lines only if we have an opening range breakout that actually triggers. If we don't have this, don't crowd our charts with additional lines. That's at least my philosophy. And then finally, the half range pullback level. This is going to be that mid-range level between the high and the low of our opening range. So I think this is a very clear game plan. Let's get started with step 1. For that, I'll come inside of my ThinkOrSwim platform, click the studies icon, and then click create to start writing this study. Now, first thing is we need to give this a name. I'll call this TI Opening Range Breakout. Now, inside of the code, we said step 1 was define the opening range, and we wanted to make that dynamic. So for that, I'll say input opening range start time, and this is all in Eastern Standard Time for ThinkScript, so I'll specify that here. And there we can set this to a default of 9:30. Then a similar variable, but this time for the end time, and we'll set that to 10 o'clock. Now that we have these two times, we need to combine them together into something that we can call the opening range. So we'll say opening range is equal to if seconds till time, and here we paste in our start time, is greater than, or excuse me, less than or equal to 0, meaning we're beyond it, and our seconds till time, and this time we paste in our end time, is greater than or equal to 0. I'm including that last minute as well. Then return 1, else return 0. So this means return true if we're between 9:30 and 10, including 9:30 and 10, or return false if you're at, say, 10:01 onward. Now let's go ahead and test this to make sure that the opening range is working the way we would expect. To test this, I'll use the add chart bubble code, and there I'll say show me a bubble anytime we're in the opening range. Plot this bubble at the closing price of the candle, show me the value of the opening range variable inside, and then make this a yellow bubble. Once I click OK, what we should see, if this is working correctly, is a chart bubble between 9:30 and 10 o'clock that has a 1 inside of it. Let's click OK, apply, OK, and if I zoom out here, you can see from 6:30 all the way up until 7 o'clock, so that's 6:30 Pacific to 7 Pacific, or 9:30 to 10 Eastern, we have the chart bubbles telling us that this is now the opening range. So we know that part of the code is working correctly. Now let's continue forward with the next portion, which is tracking the high and the low. So let's say def opening range high, and there we need to account for a few things. One, is this the very first data point that we're seeing for the day? Is this the first candle? If that's the case, then it's naturally going to be the high. That's going to be the very first high that we track, the opening range high, and then we only know if the next candle has a higher high or if it's a lower high. So that value needs to keep updating, but the first data point will always set the value from the get-go, and then that updates throughout the day. So for that, if we say if seconds till time, and in this case, opening range start time is equal to 0, meaning it's the very first candle, 9:30, then we're going to return the high since we're naturally using the first data point. However, if that's not the case, then else if we have opening range, so we're within that opening range period, and the high of the current candle is greater than our running high up until this point, then let's go ahead and update that value. And if that's not the case, so we don't have a higher high, then carry that previous value, forgot to add a space here, that previous value forward. So if I show you what this looks like on our chart, so let's plot this opening range high, apply. So we can see our high here from this first candle is 408.52. Just keep an eye right up here. So 408.52, and we can see that in this chart bubble. The next candle doesn't make a higher high, and that chart bubble continues the value 408.52. Now the next candle does make a higher high, and you can see the chart bubble updates to 408.75, which is the new high. We make a higher high, that value continues to keep updating. And just like that, that value keeps updating all the way up until 7 o'clock, where our high is from this candle right here, 410.54. We can see the chart bubble goes 410.54, 410.54, and it just continues holding that value even throughout the range after. It doesn't keep updating. So we know that our opening range high and our opening range low in that case most likely should work correctly. Let's make the low one as well, and we can test that out too, just for good practice. opening range low. Same concept, but this time instead of our high, we're going to use our low price for the first candle. And then we're also going to check, is our low less than the opening range low from the previous candle? If so, go ahead and update the value. Otherwise, carry the value forward from the previous candle. And if we test this out, opening range low, apply. And so if we start with taking a look at the low value up here for that first candle, 408.02, that's what our chart bubble shows. We make a lower low, that chart bubble updates, 407.97, another low, that updates. So we know this is working correctly. Now let's come back inside of our code, comment out the chart bubble, and keep moving forward. Now that we have the opening range defined, we can also define now that range in which we're looking to take new entries. So let's go ahead and do that first. So I'll say input, let's call this trade entry. I'm going to skip the word range here just for the sake of brevity. So I'll say start time, EST. And this is going to be that same time that we end on for the opening range. And I'll also create trade entry end time, EST. And I'll give this a full hour here, so 11 o'clock Eastern. Similar to the opening range here, I'm going to create a new variable which allows me to track the trade entry range, the period in which we're looking to take new trade entries. There I can plug in our new start time and our new end time. So what we've done here is duplicated the opening range, so this was 9:30 to 10. Now the second one is 10 to 11 in which we're looking for new trade entries. Now that we have the trade entry range, I think this is a good time to start to do some initial plotting. The first thing that we can plot is our opening range high and low. So let's go ahead and start with doing that. We'll say plot high cloud is equal to, if we're in the opening range, then plot the opening range high, else double dot nan, which means plot nothing. Similarly, I'll create a plot low cloud, and I'll say if we're again in the opening range, then plot the opening range low, else double dot nan. For each of these, I like to keep them a little bit cleaner, so I'm going to make them a default color of color.gray, which allows it to more or less blend in with your charts and not stand out like a sore thumb. You can still see it, but it's subtle enough. So we'll say set default color, color.gray. Now that we have that, let me use the add cloud function so we can color in the distance between these two lines. So I'll say low cloud, high cloud, and then the color in between will be gray. Now if I click apply, what we should see is our first little formatting here. We have from 6:30 all the way till 7 a.m. Pacific, our opening range is shaded in, and as we make a higher high here, you can see how that range is expanding, but that low stays static ever since this low right here. If you come inside of the studies menu here and you change, say, the opening range end time from 10 o'clock to maybe 9:45, you'll see the gray box here naturally updates without you needing to do anything else. Now let me come back in, change this to 10 o'clock, apply, and let's come inside of our code. Now the next thing we need to do is create the formatting for that trade entry period. Now I don't want to see a shaded cloud or anything like that. I think that just becomes a little too messy. I think a nice dashed line would be, again, subtle and a nice way to try and seize a breakout happening. Keep in mind we can make those projection levels a little bit more bolder, which can then be your very obvious sign that, hey, a breakout has triggered. So let's keep moving forward here with defining the extrapolated line for that trade entry. So I'll say plot trade entry high extension. And there we can say if we're in that trade entry range, the period in which we're looking to take new entries, then use that same opening range high value in the case of the high extension, else double dot nan. And then I'll repeat the same thing for the low extension as well. Low extension, in this case, we'll change this to low, else double dot nan. And we can give this some plot values as well, or some formatting tips or guidelines rather. So the first one we can say is set painting strategy. And let's give this a painting strategy of horizontal, so it plots as a horizontal line. Repeat the same thing for trade entry low extension as well. And then for trade entry high extension, we can also set a style here, and we can make this a short dashed line, just so that if you're zoomed in, I think it will look a little bit nicer. And then I'll repeat the same thing one more time for the trade entry low extension, and then I'm going to repeat the same color concept as well here for the high and the low color, but this time we'll plug in the right variables here. So I'll say high extension and low extension. So what we've done here is we've taken the high extension and the low extension, which is the same values from the opening range. We've just extended them, and our goal is to try and plot that as just a dashed line here. So if I click apply, we can see that's what happens. And this should stop at the 8 o'clock mark right here, and that's exactly what happens. All right, perfect. So now let's come back inside of our code and keep writing some more. Now the next step that we have, since we've defined now our opening range, we now have our trade entry range, is to create that switch variable. And this is where I think things get a little bit fun. First thing we get to do is come up here, go to the very top of the code, and we'll say input entry type. And this is where we get to give the user a nice drop down. We'll say default, and you have two choices here. We'll say wick touch or close above, let's call it. And just know that close above means both close above or close below in the case of a bearish setup. The idea there is you're looking for the close of the candle price compared to the wick touch. And one thing to, again, call out with the close above, the 1 minute time frame chart here will give you the most accuracy. If you go to something like, say, a 5-minute candle, then the 5-minute candle's closing price is the one that will be used. So just keep that in mind. 1 minute is your greatest, most narrow factor point. Now if I come in, let's start writing the code here for the switch variable. There's two different conditions that we have that would define our opening range breakout. We have a condition in which we have a bullish breakout, meaning we break above this line. We have a condition in which we have a bearish breakout, meaning we break below this line. So let's go ahead and define each one of those. So we'll say bull entry condition, def bear entry condition. Now we have these two variables, but we're going to get errors since we haven't defined them yet. So that's where the switch variable comes in. Let's go ahead and write that. So we'll say switch entry type, which this was the name of the input variable that we just defined right up here. So entry type. And there we can now open this up with curly brackets, and I'll put in the closing ones as well. Now inside of this, we have two different cases, which were the two different choices we had, wick touch and close above. So I'll start with case wick touch, and then I'll make room for case close above. Inside each one of these, we need to define bull entry condition and bear entry condition. So for our wick touch, our bull entry condition is, first off, are we within that trade entry range period, the time in which we're looking to take new trades? If we are, then is our high, in the case of a bull, greater than our opening range high, meaning we've broken above the opening range high and opening range high breakout? And was that condition not true on the previous bar? So that's bull entry condition. For our bear entry condition, if I copy that in, but this time low is less than our opening range low. And this condition on the previous candle was not true, meaning our low was greater than the opening range low, then return 1. Now we need to define this for close above as well. And it's going to be very similar here. We need to still check, hey, are we within that trade entry? But this time we're looking, did we close above the opening range high? And on that previous candle, did we close below the opening range high? Same thing for the bear entry. Did we close below the low? And on the previous candle, were we above the low? Above, greater than, or equal to the low. So now we have bull entry condition, bear entry condition, and that value changes based on what the user selects. Now that we have the bull entry and bear entry conditions defined, we can very easily create a variable called something like def bullish opening range breakout, which is that exact moment that an opening range breakout actually occurs. So let's go ahead and do that. Let's say def bullish ORB, and here we can say if bull entry condition, so based on whatever the user selected, if we do have that bull entry condition being true, meaning an opening range breakout based off of either wick touch or close, then return 1. Else, if we're now no longer in that trade entry range period, then reset this variable to 0. Else, carry forward that bullish opening range breakout variable. And I'm going to repeat the same thing for the bearish side as well. So I'll say bearish opening range breakout, if bear entry condition, then 1, else if trade entry range, then 0, else bearish, ORB. And now if we use the chart bubble to test this, let's say bullish ORB or bearish ORB, and then inside we can just return the value 1, but let's make the color of this a little bit smarter. So let's say if bullish ORB, then color .green, else if bearish ORB, then color .red, else color .yellow. Let's see what happens now. If I click apply, we have, I think this set to wick touch by default, and we can see here we have a wick touch taking place right here, and ever since that point this now continues to return true all the way throughout. Now if I come back inside of our code, let's go ahead and comment out the chart bubble one more time, and now we can keep moving forward, but this time we can start to do things like get the range statistics. We're getting towards the end of the code portion now, where we would essentially need to define the range, use that to calculate the midpoint. Once we have those two values, we can then essentially start to project both the upside values and the downside values, and introduce the logic of only plotting them if either one of these two setups is true, meaning we have a 1 triggering. So hopefully that's clicking in, but we'll go through it as we go through the code. Next step is defining the range, the opening range, in terms of an integer value for the width. So there I can say def range is equal to opening range high minus opening range low. After that, we can also define the mid range, which is going to be exactly the midpoint between this. So we can say range divided by 2, and that's actually going to be opening range low plus range divided by 2. And in fact, it might actually make sense to say something like half range and do range divided by 2 here. This way we can just call plus half range, as I'm sure we'll probably call this more as we go through this. So as of right now, we have our range defined, the width of it. So let's actually plot this inside. So if I change this 1 now to a range, click apply, 2.93, is that the distance here? 2.93. Okay, perfect. So we now know the range is working the way we expect it to as well. So range, then we have the mid-range or half range and the mid-range. The mid-range is actually something we can plot as well. I think that might be something useful to plot. So let's go ahead and do that. We'll say plot mid-range plot, and then I'll here essentially say if we're in that trade entry range period, then only plot the mid-range. So that line only plots right here all the way up until where this line is. Otherwise, don't plot at all. So we'll say then mid-range, else double dot nan, and then I'll follow the same formatting as we did right up here for our trade entry extensions. So here we can get rid, we just need 1, and then I'll go ahead and update these values. So you can hopefully see that this is a lot of copy pasting now, but we're almost there. So if I click apply now, we have the mid-range as well. So this particular day in S&P, so this is June 7th, this is looking like a very interesting day. If I get rid of this chart bubble so we can take a look at it before we continue the code portion, we had first that wick touch break, which is where that green bubble started plotting. After that, we pulled back to that mid-range before then breaking above, and here we had the close above before we continued onward. So now the question is, how far upward did we go? So let's go ahead and do the upside projections here as well. We can do the downside ones next. So first set we have is def halfway upside projection. And here I can say opening range high plus, and this is going to be that half range value. So we're essentially taking the high of our opening range, and to this we're going to add half of the range, the same distance to the upside. So that's going to be the halfway upside projection. And if I go ahead and now plot that out, so I'll say plot halfway upside projection plot. If we have a bullish opening range breakout, so only if we have that breakout in the first place, and we're still in that trade entry range, then opening range high plus half range. Actually, we can use this value right here, else double dot nan. And then if I now create some formatting for this, halfway upside projection plot dot set painting strategy dot horizontal. Let's make this a color of light green. If I click apply, now we can see the light green line plotting, and this is where we hit that halfway upside projection, which is only plotting because we actually had that opening range bullish breakout. If I zoom out, we can actually test this. So if I zoom in here, we see it plotting as well since we broke above. If I keep coming forward, we broke above there. Here we did not break above. Do we see a line plotting? Nope. Perfect. Keep coming forward here. No line as well. Okay, perfect. So I think this is working the way we want, but let's continue with that full projection as well. So after the halfway upside projection, next up we have the full upside projection. And there, instead of half range, we're just taking the opening range plus adding the range. And there we have the full upside projection plot, which is a very similar idea. Only plot this if we have the opening range breakout and we're in that trade entry zone. And if that's the case, then use the full upside projection. And now we can update these values here as well. Instead of light green, maybe we make this dark green, and perhaps we can even add, I think it's set line width. And click apply and click OK. And now we have the full projection as well, which on June 7th seems to be, I think this is June 7th, yep, respecting pretty nicely. So that's a good one to see. Now let's go ahead and do the same thing for the downside as well. So if I copy both of those chunks in, and this time we update this to say halfway downside and downside. Same thing here, downside, downside. And now we would take our opening range low, and in this case minus the half range, and for our downside projection we're looking for the bearish opening range breakout. We're still in that trade entry zone, and this time we're going to be using that halfway downside projection level as our area that we're plotting. Now we update our two plots. And this one we can make color.light red. And then for our full one, opening range low minus the range. And then again, a bearish opening range breakout. Are we in our trade entry range? And do we have a full, or excuse me, if that's the case, then project that full downside projection. Okay, update these. Apply. Let's go ahead and test this out. Let's see if we can see any of the bearish examples as well. All right, so here's one where we broke below and we can see the downside projections. Currently our entry is set to the wick touch. All right, so there you have it. We built our very own opening range breakout indicator. That's smart. It works on any market. You can go ahead and play with it. You can go ahead and change however you'd like the entry type to take place. You can change whatever you'd like to change in terms of the opening range start and end times. Same thing with the time in which you're looking for the actual breakout to take place. You're also welcome to customize the lines, all of these different lines and levels directly from the plots. And you can then click Save as Default here, and that will then save the changes as well. Again, you can download the final version of this indicator using the link in the description box below. I hope you found the ThinkScript portion of this tutorial to be useful. It was definitely a little bit longer than I think we're used to, but I think there's a lot of good concepts that we covered, and hopefully you feel confident enough to customize this indicator and make it work for whatever you might be looking at in terms of your own opening range breakout strategy.